Good afternoon, everybody. Welcome to your Thursday edition of the TraderMerlin Show. An exciting Thursday. We will cover all the markets in depth a little bit later on. I'm going to try to do that near the end of today's show. It is the 25th of August today. As I've been trying to do here, I'm going to try to do a little bit more direct into our guests. And we've actually had a few questions regarding options charts. Now, most of us, when we look at an underlier for an option, we are looking, let's say that you're trading the options on Dell. Great, I'm going to look at the chart of Dell, and that's where I'm formulating those decisions. Well, a lot of people have been asking me, like, well, can you use the options specific chart? Meaning I'll pull up that contract and pull up the chart, and does that help me in any way, shape, or form? It's a very interesting discussion, and here to help me make sense of more of how we use these things, we have Corey Lane of TradersArmy talking option chart trading. Corey, how you doing, my friend?
Yes, you do. What's happening, my man? How are you?
I'm good. Another day in paradise. Good to see you. It's been a long time. What have you been up to?
Trading, enjoying my new backyard that is finally 99% done.
Wow.
And we got to have you over to enjoy that.
I was just going to say, I don't recall getting my invitation since we don't do the conferences anymore. I hardly ever get to see you, buddy. So, yeah, let me know when I need to come on up.
I'll be letting you know soon. We were waiting on a couple of key things, and they were just wrapped up this last week. So, so excited about that. Yeah, TradersArmy is going great. A lot of cool students and a lot of things going on there. Fund management. Kids. It's never a dull moment.
You're a busy man. I was kind of looking forward to maybe seeing your kids perform this weekend. It's like the only time I ever get to see is when your kids are performing somewhere. So
yeah, they don't have a show coming. They have a show coming up like maybe the second or third week of September over here near me, but it's a little far for you.
It's not that far.
Come on, 40 minutes.
I think I can handle it. My electric bike has that kind of range. I think I can manage it.
There it is. I'll give you the details.
Well, obviously, as you can't see my video, but the guests can. You guys can tell that I'm really trying to be like Corey. I've got his shirt on today. We've got the same look, got the same feel. I'm going with the V-neck, going with simplicity. He actually helped me with the simplicity of my option strategies as well. So let me bring up a quick question here, and I'll read this one out loud, and then we'll go deeper into it. OG says, does anyone use a chart for individual options contracts? I just started paper trading, buying calls and puts, and it seems to be going well enough just charting the stock and keeping a panel open with current price of the contract that I'm in. So just curious what you might think of that basic approach. Now, we can talk about two different ways to look at the underlying. Number one, the underlying for the option we're trading in. The option itself, which is, I think, something most people don't look at when they're trading options. What do you say?
Yeah, I would agree with you. I've never personally studied the option chart quite as much. I know that throughout the day, the option itself, especially when you talk about some of the volatility in options, sometimes it's really much more difficult to read the chart on the option, unless, of course, it's an incredibly liquid option like an Apple or a Q's or something like that.
Right.
Option. But I still haven't found a ton of value as a swing trader of charting the option or the option spread. Mm-hmm. Primarily because I'm not trading the options value as much as I'm trading the outlook on the stock.
Right.
And so if my outlook on the stock is, up or down or sideways or whatever it is, I look at the option as the vehicle that's going to get me to my profit goals based upon my outlook on the stock. And so if I'm swing trading these, then I don't really care to the penny what I pay for my option necessarily enough to go chart the option and try to find the low of the day or the high of the day and try to, kind of find my way into that option position for 1 or 2 pennies better. Now, if I were day trading options, there'd be a very small list of stocks that I would even do that with. Q's being one that I can see because it is, historically pretty volatile. It's got really super liquid options. You could probably even do it with a SPY.
Right.
Plenty of movement these days. And for that, if you're trying to get every penny's worth of value out of it, I could maybe see charting a call or a put to see, well, how low was that call trading when the stock was trading in this area of support or resistance or supply or demand, so I can gauge, how much I should put my limit price in to buy that call once it hits that area of support. And I could see maybe a little value in that, but you've got to be really hyper picky about every penny you spend on that option to really find, in my opinion, value in that.
Yeah, you know, it's interesting you say it like present it like that, because one of my friends, he actually does look at those charts, and I've watched him do it, and he's really using it kind of like the way I would use average true range and saying, you know, let me see what I guess the volatility or motion of that security is. Like, how much is it moving? What does it look like on an intraday basis? So you can look at that chart specifically as a shorter term trader and gauge not only the volatility, but its ranges, and knowing maybe where you want to start putting those orders out there. Because if you're going outside of the range for the day, your odds aren't that great, are they? You want to stay within the ranges that have been established. And I don't think personally, and for OG who asked that question, I wouldn't look at as this is what's going to make the decision for me. It's just kind of like I'm buying the car anyway, which is going to be based off the underlier, but I might look at that option chart specifically for the fine-tuned little details. How's the stitching on the seats type of thing, but not the piece that makes the trade for you.
Right. The one thing that actually I just thought of too while you were saying that is, especially for swing trading, if you go back and you chart an option today and you say, okay, well, where's the option trading today? And what was sort of the movement that we've experienced in the first couple of hours of the day, and I'm trying to time my entry using the option chart, and the option might have a chart that goes back 3, 4, 5 weeks. That's going to be completely a different kind of scenario from 3 or 4 weeks ago, because there's theta that has now 3 or 4 weeks been burned off, so you're going to see some potential depreciation there. In the options value due to theta. Volatility could have been a little bit different. So it becomes, in my opinion, a little bit more difficult to just say, okay, well, back then when the stock was at this price level, the option was trading for $2. Today it's trading for, X amount, and I'm trying to target that price from 2 weeks ago. I don't think there's a big connection of relevance between 2 weeks ago and today, based upon where the stock is trading because of theta and vega, which is your time and volatility exposure. So, and I've just never been that picky from a penny to penny basis on where I get my options filled, as long as I'm in the area of the chart on the underlier that I really prefer to be in, let it sit for the next several days, several weeks, several months, and let that play out.
Yeah, and I think one of the differentiating pieces there is when you make a trade, you know, okay, if I get it at this price, then I'm expecting to risk X amount of capital, or your risk and reward is I'm trying to get at, and based off your entry. And certainly, I think it'd be stupid to think we don't all want to buy at the dead low and sell at the dead high, but realistically, that's probably not going to happen. I mean, over my trading career, which has spanned over 20 years, I would say that I've bought the dead low and sold the dead high to the tick 2 or 3 times. I'm talking out of making thousands and thousands and thousands of trades. I was averaging 550 trades per day back in the late 90s, and but it was just high-speed day trading, man. It was insane. But my goal isn't to get those dead highs or dead lows. It's saying I'm going to buy here based off my analysis of entry, stop loss, and price target, and if that works for me, then I'm happy to take that trade, period. And if I could have made an extra 2 or 3 cents, so what? It's leave money on the table, but as long as I get what I want out of that trade, then I'm happy.
Right. Yeah. And I guess 2 or 3 cents times 80,000 shares might be a big deal. But my contract size is maybe 10, 20, 30.
Right.
In the fund I manage, it's, a couple thousand, but, every penny counts, I guess, but it's a little much to chart, in my opinion, to chart the option quite so heavily, and certainly give it more weight. I would never give it more weight than the stock chart itself.
Do you have an example? Because I don't have an option platform open right now. I know you probably have Thinkers. You always have Thinkorswim open, so maybe people don't quite understand what we're looking at. Pull up any option contract and say, let's just take a peek at a chart and see what that might look like. There we go.
You can see it?
Yep.
All right, let me make it a little bit bigger. This is usually,
so everything you guys see there, those are all the underliers that he's looking at. So he's got NASDAQ, Russell, S&P, and the Dow on there.
Yeah, that's just my broad market. Yep. Sort of, I take this, outlook first, and I'm like, okay, which direction do I think the overall market's going to go? And then I dive into a specific stock. Let me give you a for instance. Let's just go into one chart. Let's just say it was SPY, right?
Okay.
And I like SPY this morning. Actually, we traded SPY in our trading room this morning with a credit spread. My overall directional bias is still bullish, but skeptically bullish. I don't know if I don't know if that kind of matches your outlook, but
Honestly, it's exactly my outlook. I've been expecting this market to have a pullback, so it pulled back into an area of demand, and I was like, okay, I expected to bounce. The dollar was coming into a supply zone, so I expect the dollar to sell off. If the dollar sells off, that should be a positive for the equity market. So, where do we go on S&P? Maybe up to that 430 mark, but after that, hell if I know.
yeah, it's literally, it's what I said. And I think it's funny because I'm watching the chat box in your online, and Liz McCord, who's in our trading rooms every day, says, Corey is the king of predicting charts that will go up, down, or sideways. It's kind of a running joke we have. But
I love it. I love it.
Yeah.
I thought I was the king, but I'll take the prince. I'm okay being taking second fiddle as long as I get my seat on the throne.
Yeah, we can. I mean, we're both up there, right? I mean, here's the outlook. It's going to go somewhere or nowhere. I mean, it could go nowhere.
Yeah.
Yeah, but I too agree. 430 is a good little mark. So this morning, when the S&P was down here in this 415 range, we were looking at some option spreads, and right here, volatility is kind of in the middle of the range. And so this is what I mean by looking at, say, an option that's trading today versus an option that was trading, maybe even a week ago, call it back on 810 when volatility was a little bit lower, more like in the 18-19% range. Now it's up to 22. Well, if we know anything about options, we know that as, let's see, when was that? That was August 10th. Today's the 25th. So as 15 days has gone by, theta has declined the value of all the calls and puts. We know that volatility has increased by a few points, so that has pumped some premium back in. So if I go over to the option chain and I just pretend here to go out and look at, say, let's just say it's a 57-day option, and I look at the SPY and I go down to something that's maybe at the money. First of all, to even chart an option, at least in Thinkorswim, you have to know the option symbol.
Mm-hmm.
And so I don't have the option symbol in my columns here. You could put it there, but the easiest way to get the option symbol is to just right-click on the strike, whether it's call side or put side, and just copy that symbol to your clipboard. So that'll copy all the details of that symbol. That's the ticker symbol. Come back to your chart, and I'll put the chart of that, just paste that right in here. And this is now the option symbol itself. And so what we can see going back, this is on a, let me see, I wanted to actually not link those. So I want to keep the right, which is the option chart on the daily. And I want to keep the left as the underlier. So SPY's on the left. And then, of course, you'll see the option itself. Now, one thing about charting options that you'll see is you'll see generally a lot of gaps when you chart the options. You may not see as many gaps on the underlier, but you're going to see a heck of a lot more gaps on the option itself. But something as liquid as SPY, I mean, these contracts are, there's 46, almost 47,000 contracts open on this one strike alone. And so the contract itself looks very similar to, if we were to zoom into roughly the same time frame, it looks very similar.
Yeah.
Right? And so something like SPY, you could just trade the option chart. Little differences, however, are things like, if this is the demand for the option, notice there was a period of time where you could have gotten the option for cheaper than even the SPY was trading, because it wasn't trading below its demand.
Right.
So there are times where you could say, okay, here's where the option is trading. It was trading for X a little bit earlier in the day, so let me look at an hourly chart and say, well, how much was that option trading for earlier in the day? Because if I can pick this option up for, say, 1060, where it was trading for yesterday, I'll buy that option for 1060, and maybe you got a bite at that apple on a little bit of a pullback this morning at 11 a.m. Pacific before this rally up to 1257. So it's on something like this, you're getting hyper specific about where you want to buy that option, and it's based upon the supply and demand for that option, which is a derivative of the stock chart to the left. So by charting the derivative product, you're really charting the supply and demand of that product, not the supply and demand of the underlier.
Right.
Which, as a day trader, I could maybe see a little value in wanting to get hyper specific about how many pennies you're willing to put out there to buy that option. But this morning, I wasn't really concerned about that at all. I hear my volume maybe a little bit low. Turned it up as much as I could.
I think that changed it. Yeah.
without it feeding back. And so hopefully that's better. And so, yeah, I mean, getting hyper specific, great, but this is a swing trade that we expect to last for, maybe 20, 25 days. And so I'm not hyper specific on a per penny basis.
Yeah.
Take something like Apple. It's a very liquid stock as well. I go over to Apple's options, pull up an at the money, say put option. Not that I'm bearish on Apple. Copy the symbol, right click copy. Come over here, paste that in, and here's what's been going on with Apple's puts since, this is, I'm sure it's an hourly chart, so let's go back to the daily.
Well, that's a hell of a
You can
range.
see, this is your, so first of all, a ton of gaps. I don't even know what this purple line is. What the hell is that?
It's a
Theoretical, that's the theoretical option price.
all right.
Interesting. Theoretical options price versus the actual options price. Now, I haven't studied that. There could be some value in that. And for that, Merlin, we're going to have to circle back to this conversation because there could be value, by the way. I have to look into what this is, where that's coming from. But there could be value in saying, well, theoretically, the option should be trading for $29, but right now it's trading for $24. Would that be something I'd want to buy or sell based upon its actual value versus theoretical value? Now, that could be something. I don't know. Too early for me to say.
Yeah.
Because I actually haven't studied that.
Now have I. You kind of blew my mind there a little bit, but okay. I've never looked at theoretical option, an indicator called theoretical option price.
Yeah, well, this is the theoretical option value comes from the pricing model. So whether you're using Black-Scholes or Binomial or Berks and Stencilin, whatever the platform is using, this is using Berks and Stencilin. It takes all the information that is known about the stock's historical volatility, the stock's, how many days are left until expiration, what are interest rates right now. It takes all this information and plugs it into the calculation. And then it says, here's theoretically what that option is worth if all this remains the same. And so then you go out to the option market and you look at the bid and the ask, and it's like, well, that's very different than the theoretical value. So if you can buy an option for less than its theoretical value, I would imagine that'd be a good thing.
Yeah,
right?
sure.
And if it's trading for more than its theoretical value and you could build a position that nets you a solid credit by selling that option, that would also be great because you'd be able to sell it for more than it's theoretically worth. That could actually be an interesting use if that's what this purple line is actually telling us. So we'll come back in a...
Yeah, that'll be our next show.
That'll be the next show.
See you next month.
Yeah. But in the meantime, you can see how a put, just this long put position has been decreasing in value the whole time that Apple has been increasing in value. And the shape of the option chart is very similar, upside down wise, to the shape of Apple's chart because it's such a liquid series of options. The thing that scares me the most about maybe charting an option is how do you chart all these gaps?
Right. Because I think a lot of people look back and they think that when you have, and I'm in this camp, like in the equity markets, even futures to some extent, I look at the gaps as a magnet to price, and that these gaps are going to end up filling. And I think when you look at the chart you got up there, you got so many gaps. I would not approach that the same way. I would not be thinking, oh, these gaps I'll have to fill.
Right. Yeah, and you just can't do that with the option chart. Because I don't think that a gap fill on an option chart has as much meaning as a gap fill on a stock chart.
Right, on the underlier, right.
Yeah,
totally.
It's not.
You mentioned a couple things here. Maybe this will help for some. I know we've got a wide group of people here. Some are trading options. Some are very heavy into options. Some don't even know what they are. One of the things that's, I think, critical for me, and you've hit on this a few times, is talking about the liquidity of a specific option. When you look at the scope of the broad markets, there's so many different things to trade. A lot of stuff doesn't even have options. Is there a specific filter or a cutoff for you where you go, you know what? This is just not enough liquidity. So, for example, I'm okay trading most of the XL financial products, like XLF, XLE, XLY, XL, all that stuff, because those are just such broad representations of a market segment. However, you might be trading some stock that trades an average of 500,000 shares a day, and you're like, oh, okay, great setup, and maybe I want to go short on this one. So you buy some puts, and you realize that it's so unbelievably illiquid that you're just getting hosed on all your prices if it even has options. So there's got to be a cutoff for you.
Oh, 100% there's a cutoff. In fact, I built a screener because, you know, back several years, especially when I was teaching more, you know, I would just kind of go into Thinkorswim had a, and they still have it, and a great little watch list to choose from called the penny increment options watch list.
Okay.
You can pull it up under a watch list, and it's penny increment options, and it's fantastic actually. Because what I know about that list is every stock in that list has options, and so I know that right out of the gate, I'm taking 14,000 possible stocks and narrowing it down to options that trade in penny increments. Now, what that means is, if you look at, say, well, we'll just keep it on Apple since we're there. A stock that has options where the options are trading for $3 or more. So the option premium, $3 or more, it's going to be a nickel increment, right? You can see that none of these actually trade in penny increments because they're all above $3. So if I were to just load up a put and go up by one increment, it jumped by a nickel. See that?
Mm-hmm.
Okay. Now, if a stock is not on this list, then these increments are in 10-cent increments, which is, you know, you start getting into wider spreads and crappier fills. Well, as soon as this option is worth less than, call it $3, say this 155 put, you know, or 150 put, notice as I increment up and down, they're now in pennies.
I learn something new every day.
Yeah, and so and this is only under the options that are priced under $3. Are they trading in penny increments? And so what I like about that is for it to end up in a penny increment environment as a stock option, they have to be incredibly liquid.
Mm-hmm.
And so I'm like, I love this list, this penny increment list, because I know there's going to be options on every stock in there. I don't have to worry about the first question, is this optionable? Second, are they liquid? Well, they kind of have to be. Well, then I found out over the years that this list never really gets updated, barely gets updated. And so I did start to find some stocks on this list that fell off the high open interest, high volume wagon. They're got wide spreads and they were terrible. So I'm like, well, there's 300 stocks in this list. I don't want to look through all 300 if it's just going to give me, you know, 200 that are even valuable. So how do I make that list even smaller? And so here's my basic cutoffs, right? So number one, for me to trade any particular option, it has to have at least 100 contracts already open. And that's like bare bones minimum 100 contracts. So Apple will always meet that requirement. You get into something like, this was always a good one, Intuitive Surgical. And it's like, okay, you know, they got 100 here, 349 there, 49, 50, things like that. Now, if you look at Apple's price, it's a $170 stock. The spreads are 5 to 10 cents wide, right? And this is after the market's already closed.
Right, and they usually get bigger,
Yeah, and which they just tend to get bigger after hours. Well, if you look at ISRG as a for instance, these things that look 1060 by 1210, I mean, these are like, in some cases, $1 or more wide.
Yeah.
And it's because the liquidity. I mean, a $275 bid, a $390 ask per contract, you know, well, the market maker, which you know, makes the difference between the bid and the ask, needs to make money.
Yep.
And if there's no actual volume or open interest, they can't make money on volume. They have to make money on the width of the spread. And so it's got to have at least 100 contracts. And I don't want to see, you know, not just one strike that has a bunch of, you know, interest and everything else has zero. I'd like to see a collective open interest of, you know, several thousand contracts.
Right.
Just in this 1 month. And so when I'm screening, I actually built a scan in Thinkorswim. It's a really simple scan. There's not much to it, and I'll show you the parameters of it. It's this. I want the stock to be trading between $3 and $1,000. I generally don't trade stocks above 1,000, not because it's not an affordability thing. It's more of the options on stocks that are trading above $1,000 a share are generally less liquid and going to have wider spreads. So I just stay away from those.
Yep.
And then I put an options open interest of give me at least stocks that have 30,000 open contracts. Now, I've toyed with 30,000, 50,000. Obviously, the larger the number here, If I scan for, these options, it's probably going to give me 116 different, issues, which is great. If I said, some of those are still illiquid, let's bump that up to 50,000 and rescan, it's going to give me somewhere closer to 60. There we go, 68.
Yep.
And so the higher this number, the fewer stocks you're going to get. But you look at this list, and I bet you know every single name in this list.
Yeah, I could. If this is a trivia game, I would probably get 95% of them. Yeah.
Yeah. The only ones that I'm like, what's that? It's going to be like an ETF, like this ARKK. But
Come on, that's Kathy Wood's fund.
There it is. So it's like, I know every one of these stocks, not even being a trader, I know these stocks. You know what I mean? But I set this parameter at 30,000. And then that's not that kind of gives me a pool of stocks that have a broad-based, general, high open interest of options on them.
Yep.
Now, that's not a fail-safe. It's not going to say that, well, you can trade every option in this list. No, because there are still some stocks that come up that's like, it's borderline illiquid. The spreads are, a little wider.
Your best buys, your meme stock ones that pop up every now and again, right?
Right, exactly. You're like, I'm not going to trade that because of whatever this reason is, but at least it has the open interest if I wanted to.
Yeah.
And then I add this one, which is I want stocks that trade greater than 1 million shares on average over the last 50 days.
Yeah, great. I mean, and that's really important, by the way, because normally people use that moving average of volume. A lot of times they do it for like 2 weeks. But going out 50, I mean, you're basically saying I want something that's very consistently trading over 1 million shares. I don't want the 3-day spike or 4-day spike of volume and then it just disappears. So that's a good one.
Yeah. So, and that's my simple option scan that gets me to, okay, give me, and in this case, it'll give me 116 stocks that I can now save and reference as a watch list every day. And now I can go through 116 stocks in 10 minutes.
Yeah.
Whereas now I don't have to go through 300 stocks, waste all that time, only to find that there's some illiquid situations there. Now, what's really cool about this is I can actually take this scan and cross-reference it with that penny and weekly list. So I can say search all symbols in the world, and that will bring up more, but I don't know how many more. Maybe a lot more, because it's every symbol, including futures. Okay, so it brought up about 50 more, because now it's scanning for options on futures. But if I have a specific watch list, then you can say, well, scan for these parameters in just the S&P 100.
Right.
I mean, so you can really fine tune how many stocks you want to look at every day, and that's kind of my basic, minimum parameters that I look at.
I like it. No, it's good. And I asked that just as a targeted question because I think we get it all the time where a trader who might be starting out will just kind of pick a symbol, and little do they know it's really an illiquid one, and those spreads get so damn wide that if you put a market order out there, you're killing yourself, right? Sometimes and there was a question that came through. Let me see if I can catch up with some of these orders. Margaret says, so do you use market orders for the option once the underlying price is where you want it on the chart? I'll let you answer it, and then I'll give you my take.
Yeah, I saw that. I wanted to go back to a couple of those questions. The answer is I don't use market orders for anything.
Yep.
Particularly because you're going to get the worst fill on the planet. I don't love that. I would use market orders on the exit if I felt it was necessary, but I would never use a market order on the way in, especially for an option. I always start somewhere around the mid price between the bid and the ask, and 9 times out of 10, I'm going to get filled right away. And so on the exit, I've even learned how to use limit orders on the way out using conditions on the stock. So I can say, if the stock goes beyond this price, that's my stop loss, exit my option at this limit price or better. And you can actually have the system kind of automatically shave off 3 pennies or add 3 pennies, whatever your offset wants to be, which, because the mid price doesn't fill all the time,
right,
you can add offsets and say, well, I'm going to add 5 pennies to the mid price, and that'll improve my probability of getting out.
Yeah, and I'm the same way. So I absolutely do the same thing. I'll never use a market order, Margaret, even if my underlier is there. If you do it a market, you're always giving up that spread, no matter what. And depending on the platform you have, if you do a limit order, you should be displaying to the open market, and therefore I'm able to capture that spread and put that in my pocket. So if it's in a demand zone and I'm looking at whatever, selling puts or buying some calls at the money, okay, I'm going to do my best to buy it as cheaply as possible. So I'll put my bid price on my offer to buy on the bid side, or my offer to sell something on the ask side, and I'm going to try to capitalize on where that spread is. Even though the spread may only be a nickel or a dime, still, if I've got 10 contracts on and I got a 10-cent spread, I mean, now you're looking at quite a bit of money. I mean, it adds up very quickly.
Well, I have different size accounts for different things, but I have my small account, which, is just usually, a handful of contracts, maybe 5 or 10. And then I've got a retirement account, which is 20, 30, 40. And then I manage quite a large fund as well, and we're talking thousands of contracts at a time. And so a market order on 1,000 contracts when your spread is 10 cents wide, you can't withstand that.
That slippage would be unbelievable.
Yeah, I mean, just do the math. 1,000 contracts times 10 cents times $10. There's 10 grand just in the spread.
Yeah. Well, I think the good thing there, if you are using when you're trading that big, is you have to use a limit order because you understand your risk is that this thing could slip significantly and you get absolutely hosed on it. So, there we go. That's like I say, limit versus market. Next one, which I think is interesting, is Corey, do you do future options on Thinkorswim, meaning options on futures?
Occasionally. I haven't in a while. And when you do, here's my issue with it overall. Is if you look at this list, so British pound, euro, crude oil, S&P, nat gas, gold. I mean, this list is the only list of futures that you can actually trade options on at Thinkorswim. And so it's a small list.
Still plenty there, though. I mean, you got a lot of.
There's still plenty there. But a lot of these markets, I've never even traded the underlying. Like, I've honestly never traded wheat futures or corn futures or any of the bond futures. I mean, I've really just stuck to S&P, gold, NASDAQ, Russell, crude oil. And so if I'm trading an option, and I've traded currency futures, but the options on all of these aren't necessarily extremely liquid. Where I would, focus my attention as an options on a futures trader would be gold, S&P, crude oil. I think the wheat and corn options are actually really liquid. I've just never traded any of those underliers. I don't know why. I think there's probably some sort of seasonality issue that I'm not exactly up to speed on that, kind of makes me a little bit, leery of trading those markets, but I could be wrong there, but I just haven't.
Yeah, I don't trade options on futures. Personally, I feel I've got enough leverage on just options or trading futures, so I just haven't done it. I've heard some nightmare stories from traders in the past on you're using leverage on top of leverage. It could be problematic. So I haven't, and I don't really have any plans to. Here's the thing. You probably experienced this as well, Corey. Is a lot of people are like, well, why don't you trade this and why don't you trade that and why do you trade these and that's like. You know how many things there are to trade? I mean, Corey mentioned you got over 14,000 stocks, then you got all these different futures products, and then I got options products, and then I got currency products, and I throw in some crypto. I mean, I'm in it with like 50,000 different things to trade. So, the key is not to trade everything. The key is to find things that you trade well and just stick to those. And, that's why I appreciate about what Corey does is, he's got his little watch list. He's got his things he looks for, and he runs through and knocks it out. I've got my specific markets, whether I'm trading equities, futures, Forex, or just options. I've got the things I look for, and I'm trying not to open up the universe to more things. I'm trying to whittle it down to a few things that work.
Right. I mean, there's a million things you could do, but I don't need to be, dipping my toe into everything if I have something that works.
Yeah.
But, to go back for a second to your comment of you've heard some nightmare stories about leverage on leverage. To also be fully transparent, I've never traded an options on futures that wasn't a defined risk spread trade.
Okay, that's better.
So I would not put myself in a situation necessarily like that. But, I know some people who will do things like this. They might say, well, I'm interested in owning gold at 1725. And as an investor, if you're willing to own that even as a trader, if you're willing to own that contract at 1725, and you go out to gold and you say for the week, is, can I make any money selling those puts? And it's a way that I know that many people, probably in your room right now are familiar with selling puts to acquire stock.
Yep.
So you could do the same thing with futures. You could say, I want to own it, but I don't want to own it unless it gets here. So then let me sell a put at that level. If it gets there, I'll take it. If it doesn't, at least I got paid to wait. So I could see using it for that more frequently. I don't trade as much futures today as I did even several years ago. I think for me, it's just I'm fine just trading my options.
Yeah. You've got a system that works for you with options. I get it.
Yeah, I gave futures a go, and I know that when I wake up early and I got to be on at 5:30 at Pacific, I know that I feel different when I get in front of the markets and try to trade something so high speed. Day trading, I gave it a good shot for a few years and I was fine at it. I just don't like how I feel while I'm doing it. So I'm like, let me just go back to my options, and that's working really well.
Yeah, there's a question came through here. Let me real quickly read this one. Glenn says, so I can only trade 3 stocks a week, but I can trade futures as much as I want. Does that work in options too?
Yes, options on futures do not have the 3-trade pattern day trading rule. You can trade options on futures as much as you want with less than 25K.
But regular options, you would be limited.
You would be limited without 25K in the account.
Yeah, it's a weird rule they put back in place, and I think it was 99 or 2000 at the time. We actually thought it was a decent idea because people were just using way too much leverage and getting crazy out there with the day trading phenomenon. But that could probably go away now, the whole pattern day trading rule.
Well, I bet it would come back in a heartbeat with meme stocks.
That's true.
I wouldn't take it off if I were regulators.
Yeah,
I wouldn't.
Never slept when trading futures. Well, it's funny. I talked about that the other day about sleeping and trading futures because it's one of those things. You got the entry stop loss. You got your stuff automated. It shouldn't blow through those stop losses, but you just never know. Remember, as Corey was talking about liquidity, a lot of times these things can be so thinly traded that a small order can all of a sudden blow right past your stop loss, especially in those after-hour sessions.
And especially if you're trading any sort of size.
Right.
I held a futures, the only one I ever held overnight, and I placed the stop and went to bed. And when I woke up, the stop wasn't there, but I was still in the trade. You should always double check GTC versus good for the day.
Oh yeah, and a day plus, the plus orders. Yeah.
Oh my gosh, that could have ended horribly.
Yeah. Oh yeah. Man. Yeah, I've actually made that mistake, but luckily not with a lot of size. So.
Dude, I've made them all, but they're not with a lot of size. I usually make all my mistakes with small size first.
Yeah. It costs a lot less to do it that way.
Yeah.
Well, I'll wait for some questions to come through here. I'm kind of curious to see what's been going on over there at TradersArmy. I know you've got a whole bunch of classes and all kinds of stuff going on. What's anything new going on with TradersArmy?
I gotta tell you, a lot of the same cool stuff going on. We have our classes and we have our trade. What I'm really having the most fun in personally, just as an instructor and managing partner, what I'm having the most fun is just being in the trading rooms and I'm not in the trading rooms daily. Like sometimes, I'll do 3 trading rooms a week, options focused. I'll do Herman, which is one of our other instructors. He'll do 3 trading rooms a week, futures focused, and Chuck Fulkerson will do his rooms, futures and ETFs and stocks focused. And I just really enjoy the fact that we have a community that I can just talk with people daily. And so, because, when I'm not doing that, not that I second guess my trades, but I just like bouncing ideas off people. So that's the part that I'm enjoying the most.
Yeah.
Is that the people that are with us in our trading rooms are highly motivated to really learn how to do this. They ask really great questions. And we get some really great, answers and content that we can share together. The teaching classes thing is fun too. We hold classes, once every few months, so it's not a super busy schedule. And then, like I said, just staying busy with that kind of stuff. Our summit, which was the last time we talked, was before our Trader Summit, wasn't it?
Yeah.
Yeah. So that was a big success. And recently, I don't know, there's probably not a lot of you guys made it to the summit, but I just recently uploaded all the recordings from the summit. So if anybody wants to check those out, We got it, I think it's at like $97, unlimited access to like 10 different presentations from all over the board, from crypto, futures, trade analytics. I mean, there's options and all kinds of fun stuff there. So you can find that under the Learn menu. I see you're on the website over there.
Yeah, I'm just noodling around.
Noodling around. So we've got that going on. Oh, there's a Discord community, so that's free to join. If anybody wants to just smash that Discord button, and that'll give you an invite to our server. So I'm just all about more.
Where's the Discord button?
Yeah, it's right up in the middle there. Just go to the left of Student Resources. It says Discord. Literally the
button that says Discord.
The button that actually says Discord.
Mama says these my magic shoes.
Yeah.
Well, I think my browser froze, so something's wonky over here with my browser. Hopefully the stream is not frozen. But all right, so click on the Discord.
So that'll get you to the summit. You can check out what we did there, and then the Discord community. If you're like, if you just want to kind of just be a part of a conversation that we're having all the time, as much as possible, then join the community there. It's free to join, and there's no obligation for anything. But if you kind of like the conversation we're having and you want to become a member, you can do that. Yes, Tom, you were there. It's great to see you again. Even Simon, you were there. I see you there, Simon, sneaking up in the room like that. I see you. Lori, I'm just going to throw out a question here. Is there a way to try TradersArmy before joining with a lot of fees? We don't have a free trial. I have a discounted 60% off trial, and that's good for the month. And then, if you don't like it, if you're not using it, if you're not interested in, you just have to let me know and I'll cancel it. And then it jumps.
You say jumps. It's not that. I mean,
no, it's $149 a month.
Yeah, that's not that bad.
On-demand content. I'm going to be starting my options deconstructed series again in another week and a half. So we'll have that starting over. That's like an 18-week, what would you call it? So live educational series on deconstructing options.
Nice.
From the ground up. So we'll start that. And there's a lot of good stuff that you get for, $149. What I'm toying with this, Merlin, what do you think of this? I'm actually toying with the idea of having a drop-in rate for a trading room. Meaning, I want to try it, but let me just drop in for $7 and let me just join the trading room and be a fly on the wall for $6 or $7 or whatever it is. And if you want to drop in for 3 or 4 of them, it's $6 or $7 a time. And if you're like, I really like this, let me become a member. Or, man, I'm glad I didn't spend the money. These guys are horrible.
I love the idea, but I will say this, and for the audience, I apologize if this sounds rude or condescending, but I'm on the opposite side. As an instructor, as someone who's been, running rooms like that, the problem is sometimes you get people that just drop in and completely disrupt that room. They're asking the dumbest questions on earth. They absolutely have no idea what they're talking about, or their confrontation be like, well, I saw this guy do it, and he's way better than you. If they're not part of that community, and obviously I know your community, right? You have people who love you and they're going to stand up for you and fight for you, which is great. But if it's someone who's just dropping in, I would say you're welcome to drop in on this $7 thing, but you can't interact. Like, we can see you, but you don't get talking privileges. You don't get chat privileges. I would block that for now, just until, and say the only way you can interact with us is if you've taken the classes, because, you got to have people speaking a common language. And even at OTA, we'd have the same issue. Someone would not take a class and someone let him into an options XLT, and next thing you know, they're like asking the dumbest questions, and the people who have learned it and studied it and feel really good about the content are like, they're rolling their eyes like, get this guy out of here, So that's the only red flag I would have.
Yeah, that is a huge red flag. That's why I was bouncing it off of you guys. But yeah, if we could know who those drop-ins are and take their chat privileges away and just say, you're a fly on the wall until you become a member, then that would be the only way to really make sense of that, because I do not want to devalue what we're doing with our actual members who trust us to kind of get through a certain amount of content in a certain amount of time.
Yeah, so, absolutely.
Just toying around with different things, right? No one's doing like you. I don't go to a gym, but I know gyms have drop-in rates, and I thought, wouldn't that be cool? I don't know.
I'd rather drop in your room than my gym. I go to the gym, and my gym is disgusting. It is. I can't believe that, it's so dirty and gross. So
I'm on a tonal, so we don't have to go to the gym anymore. So.
Ooh, look at you! You put yourself your little Peloton and go, Corey, go pedal.
I don't have a Peloton. We have a tonal.
Okay. I don't know what that is. It's like the mirror one? I don't know.
It's kind of like that, but it's got a whole digital weight system built in. It's actually really damn cool, actually.
All right. Well,
what was Lori asking? Okay, thanks. Is that on the website? Are you talking about like the 60% off code?
I think so.
Okay, so it's not on the website, but here it is, Trader60. So when you go to the website and you go to sign up for your pro membership, which is normally $149, as you're doing so, there's going to be a little link that says, have a discount code? Type it in here. I just type in Trader60 and that'll take 60% off. I think it's like $59 then for 1 month, and then it jumps to $149 unless you let me know you're not interested in maintaining that.
Nice.
Before your month is up. So.
Let me quickly ask you one thing here before we wrap up. Michael, who's one of the regulars, was asking, he says, any tips or strategies for trading around earnings? We have right now, we're at the tail end of earnings season, all the big stuff is out, but do you have a general rule for yourself with regards to earnings? Like, I have specific rules that I follow, but I'm curious what yours are.
I do have a general rule. Don't trade through earnings.
Not even selling before when you get like super good premiums?
No.
Too risky?
No. The reason being, and I saw this, and to be fair, it'll probably will work out 90% of the time. If you sell options out of the money as sort of a naked strangle, or maybe even part of an iron condor where it has defined risk, I could see 90% of the time, if you're wide enough, that might actually work out. But I've seen it a handful of times, and I'll never forget. It was Chipotle, and I was teaching a class in Dallas, and this person came in, kind of a novice, a little bit cocky. I sold some naked options. No, it wasn't naked. Luckily, it was a spread. It wasn't naked. I got thinking how bad it would be if it wasn't naked. These strikes are $55 out of the money in both directions. And the expected move on that was less than $50 in either direction. And so he was outside of the expected move based upon implied volatility 2 days before earnings. And I'm like, okay, let's see how it plays out. And the next day, Chipotle gapped $97. Almost 3 times, about 2.5 times its expected move.
Yeah.
And he lost, it was a defined amount of risk, but he lost everything in that trade as far as like what he was, like his max risk.
Right.
Not all of his money, but it was a decent size, like 30 contracts. So it was like not a small move. And I'm like, look, 9 times out of 10, that's probably not going to happen. But the one time that it does happen,
yep.
If it wipes out your other 9 trades that made you money, what's the point?
It's just not worth it. Yep.
It's just not. It's just there's 361 days out of the year where that isn't a risk. I'm just going to trade those.
Yeah.
So personally, I don't trade around earnings. There is one that if you catch it, people talk about straddles. Just buy some calls and puts. I don't really care which way it goes as long as it goes. Those are not really paying off as much nowadays because you really need like an 18 to 20% move on the stock to justify, a bi-directional trade like that.
Right.
And with stocks prices so high these days, an 18 to 20% move is not as common as it was back in 2004 when I first started. But if you look at something like what's called a call ratio back spread or a put ratio back spread, those can pay off if you have a general idea of which direction the stock may move. But if you're dead wrong, there's still an opportunity to make a little money. Mm-hmm. If you're dead right, there's an opportunity to make a lot of money. If the stock goes nowhere, you're screwed. It's bad. It's defined amount of risk, but it still can be bad. And you got to catch the stock when it has extremely low volatility, which is a hyper-specific amount of, specific bullet points in terms of criteria that it's not often those opportunities come around. But, I do teach call ratio and put ratio back spreads in our Options Plus course. And one of our members, Roberto, who's not with us here on this call, but he's got it. He definitely knows what he's doing. And he's used them to trade some earnings plays, and they've worked out pretty well for him. But he really looks for those hyper-specific environments, and he's very disciplined in not taking them when he doesn't find them. And many times we just stay away from earnings.
Yeah.
Personally.
I'm with you. So, Skilled Stocksman, who was one of our regulars, he's not here today. He made a point. He said last time that Corey was on the show, he said he would play drums on the show. Ooh. And I see Margaret saying, "I would love to hear you play the drums, Corey. When are we going to get you to play drums? You can do your outro on drums."
Well, see, here's the thing. I tried this in one of our Zoom meetings. It was an internal Zoom meeting, I think, with Chuck and I. Somebody was on the call. They were like, let me see, let me hear. And as soon as I sat down and started smashing these drums, the sound was obnoxiously distorted. It sounded awful. And so I'd rather just point you to the music that I put on Spotify years ago, and you can listen to me on recording there. Or when I record something new, and I do it in a controlled environment, then you can do that. But playing live right here through these microphones, it's god-awful distortion.
Fine. God, he's just chickened out on us, folks. He's just
chickened out. Hey, I'm not afraid to play drums.
I know you're not. No, one of these days we'll get you on drums. So, and you should promote your music, man. Go play some, you said this a long time ago you did this stuff. What's the holdup? I know you're training the kids to be great musicians, but where's the new stuff, Corey? I need to see you out. I got Motley Crue's touring with Def Leppard and Joan Jett. I mean, why aren't you opening up in that venue? I could see you being an old hair metal rock band.
No, you couldn't. A hair metal rock band. You could see this being a hair metal rock band?
In the 80s, dude. In the 80s.
In the 80s, sure. Yeah, of course. So I'm recording with 4 different projects at the moment.
Awesome, good.
I'm recording, which means I record all my drum parts. Somebody else records guitar parts, bass parts, vocal parts. It all ends up in my studio, and then I mix it. We send it off for mastering, or I'm actually purchasing a bunch of gear that I can handle my own mastering, and then we release it in the digital domain, Spotify, iTunes, Amazon, all that stuff. So we can do all that, but everybody that I'm working with nobody lives near me at all.
Yeah.
I'm talking like Texas, Nashville, Florida. So the people that I'm writing and recording with don't live here. So the odds of us performing any of that live are highly unlikely, but not never.
Well, looking forward to hearing some of it. I'm your biggest fan, man. I never heard you play, but I'm your biggest fan.
You've never even heard any of the recordings that I did?
I don't think I have heard any of your recordings, no.
Really?
Yeah.
What you need to do is go into Spotify.
All right, there we go.
Or go into iTunes and search out. It's older stuff, and it's rock and roll stuff. And the name of the band that I have the most music of, which is only one album worth, the name of the band is Mercy Drive. So, Mercy Drive, a decent little following.
I'm logging in. Hold on.
7,000, and you could listen to the whole record that we made. And then I did also do some stuff with a band called, which I'm actually recording again with, a band called Big Dismal. And I wasn't on their record. That was a different drummer.
It was 18 years ago, man.
Dude, I know. It's way too long. But we did some songs for The Passion of the Christ. Remember that movie?
Yeah.
And we did these 2 songs, and I'm on these recordings, Rainy Day and Reason I Was.
Oh, hold on, I got to switch over view. I was, there you go. So I was on.
So Mercy Drive is one band, Big Dismal's the other on the Passion of the Christ soundtrack, and then you'll find that we did some stuff with the WWE, so.
Yeah, cool.
Wrestlers and stuff.
Love it. Well, it just shows that you're multi-talented. It's funny how over the years I've learned that so many musicians are actually traders. I wonder if there's some common thread there. Maybe it's ability to follow rules and learn the language of a new tool, which is the financial market. So,
well, I actually think it's more the discipline it takes to learn your instrument and kind of master your skill there is no different than how I would approach, really anything. So trading or woodworking or whatever I'm doing, I'm going to maintain a high level of discipline. And I think there's definitely a lot to that, but there's also, as much as trading is very technical, there's an art to it that you can't teach.
Yeah.
You just have to have screen time and you have to develop that.
It's like driving skill. Honestly, I think it's a lot like driving skill where you and I live in Southern California where people think they're the greatest drivers in the world. And, take the basic classes. Yeah, okay, great. You're not going to make you a great driver. It's practice. It's experience. It's knowing what to do when some guy drives by you as you're going down the 10 and they pull out a gun and start shooting at you. These are things you need to know in California.
Oh, you do. And it's scary because I'm actually going through that with my oldest son, Cash. He's 15 and he's starting to drive now. So.
Yeah. Well, teach them well. As David Crosby said. All right, Corey. Well, hey, I don't want to keep you on longer. I got to wrap up. They were going to try to get me to an hour show, and I don't do hour shows anymore, so we're almost there. But thank you very much for coming on today. I appreciate it. Good to have you back on, and thanks for talking about charting options. You know, it was a good discussion there. I appreciate it.
I love it. I love talking to you, Merlin. I love hanging out in here. So I need to come on more than once every 2 months.
You heard it here first. I'm down with that. All right, Corey. Well, thank you very much. Have a fantastic remainder of your day, and I will talk to you soon, my friend.
Sounds great.
All right, take care.
Talk soon.
Okay, that was Corey Lane of Traders Army giving us some insights into options, sharing his screens a little bit, and talking about the charting side of it, which I thought was an interesting question. So I hope that the question was answered out there for, that was for OG. He may actually be here with us today. Yeah, all right. So let me see. I got 3 minutes left. Here is what's going on for tomorrow, and I apologize. There were a couple other questions I didn't get a chance to get to. And Big Eb, you have me wondering. You said that the audio was really bad earlier. I noticed it's been bad for a couple guests, kind of fuzzy when the guest is speaking. Like mine seems to be crystal clear. If that's the case, let me know. I'll have to figure out why that's coming through. I think it has to do with I'm either using Zoom or Skype for the calls, and I've noticed that it just sounds weird for the guests, so I have to fix that if it is an issue. Here's your calendar for tomorrow. Obviously, we've got the Jackson Hole Symposium going on right now. That is a big one, but that's going to be all day. Other than that, you've got some decent announcements for the U.S. You can see here we've got the core PCE price index, which is a huge announcement. That is a monster one, and they're expecting, actually, you can see here that the previous number was 0.6%, and given the fact we saw CPI and PPI dropping so good, they're expecting this core PCE price index to drop significantly. So we'll keep our eye on that one for tomorrow. That could be a major market mover. You also have Jerome Powell will be speaking at 7 a.m. That is exactly 30 minutes into the trading session. So all eyes will be on that one. It could be a wild ride starting 30 minutes into that trading day. Yeah, I know that the guest audio is a little bit low, but yeah, okay. Well, thank you, John, Margaret, Big Eb, and Alan as well. I will do my best to see if I can figure out what the heck that is, because no one likes to listen to a echoey broadcast. And that was it. All right, that's going to do it. So, Big Eb, you thought you were going to get an hour show? Nope, I'm going to end right now. Tomorrow is Friday. Of course, if you have anything you want me to discuss on tomorrow's show other than what kind of whiskey I'm drinking, you can email me at TraderMerlin@gmail.com or put your comments down below any of the YouTube videos, and I will get to those on tomorrow's show. So thank you guys so much. Hope you have a fantastic remainder of your day, and I'll see you tomorrow. Take care, everyone.